Good afternoon, friends and traders. Welcome to the market recap. I am Dan Hodgman. It is Tuesday, August 25th, and man, this summer is coming to a fast close. I hope you guys are all having a great day, and had a great day yesterday as well, and also had a nice weekend. As you guys can see, we are enjoying some of the summertime, so I was off, had a nice little 4-day weekend here, enjoyed a little extra summer weather. And I hope you guys are doing the same. You know, that's one of the most important things to do, especially as we're kind of getting ready to get back into the swing of things. I know a lot of you probably have children, so that's going to kind of come back into full force, whether it's actually going into the classrooms or you're doing some of this homeschooling that we're seeing with a lot of things. Markets are about to go back to it. You know, one of the things going on right now, JP Morgan's talking about how they're going to start bringing employees back into the office. The big dogs are coming back from the Hamptons and all their summer homes to get ready to go for the year. So we're all getting ready for it. So make sure when you have some time to step away, make sure you're doing. I cannot stress that enough. As you guys probably have noticed, I really do enjoy taking some time off. It really helps me regroup, whether I'm doing well or doing poorly. It helps me come back and stay grounded and stay consistent what I'm doing. All right. So markets relatively quiet here. Excuse me, I swear, living with a shedding black lab when it's 92 degrees out, hair somehow ends up everywhere in my life. Anyhow, so where was I? Markets relatively quiet here. No big breakout moves other than crude. Crude oil made some big moves and found some key levels. If you guys kind of recall, weekly kickoff high in crude oil was 43.40, and right now we are sitting at 43.38. So it really attracted to that level today. I think it's about point of control is about 2 cents below that. So we'll take a look at that here shortly. Other things to kind of keep an eye on: S&P's another record close, NASDAQ record close. Pretty wild, right? So today we had a coach's playbook. We talked a lot about divergences. And divergence can mean so many things. I think a lot of times we think about, well, the divergence is volumes going down, markets going higher. Eventually this thing, we're going to need to bring in new volume, find a fairer price. You're going to see the market sell off. We're going to bring that volume back in, and then we'll get back to moving in conjunction with each other. Another thing that I was talking about that I find interesting is looking for those key indicators. We saw one last year, which was Treasury yields. Treasury yields, people kept saying, we're getting ready to enter recession. We're getting ready to enter recession. And hindsight's 2020, right? You know, when is that going to happen? Well, we're now seeing equities making these all-time highs. Are there other indicators out there that telling us, hey, we got some sort of divergence? I think it's worth diving into. I think it's worth paying attention to. And one that's a prime example, in my opinion, is if gold still was pushing those highs, was still pushing well above 2,000, we may be showing a divergence because in theory, gold is supposed to work inversely correlated. Now, this is just theory. Obviously, there's a lot more that happens to it. Inflation, value of the dollar. There's so much that goes into it. But as just a high level leading indicator is if gold's going higher, equities should technically break. Obviously, gold has kind of fallen back a little bit here, but we're still seeing some nice moves there and a couple of these other leading indicators. Anyhow, I digress. Before I get too off track, why don't we go ahead and take a quick glance at these markets. All right. And also, let's see. Charles, good afternoon. Sarah, good afternoon. Yes, it's great for the soul. Could not agree more. Tanya, good to see you. And Frederico, what do you think about NQ? Well, we're going to get there. That's going to be our third market we'll look at here. So, as always, let's just start with crude oil. What do we have happen here in crude oil? Obviously, extremely volatile moment on the open here this morning. Market opened up and took off to the races. And now, keep in mind, when we point out these levels, be via weekly kickoff high or some of the levels that I talk about myself, there's a lot that goes into determining that price and why we think it's a valid point. Now, if I go back to last week, I have all over my notes 43.37, 43.37, 43.40. I mean, I can go on for days. I have so many points saying I love 43.30 up to 43.37 and 43.40. there's a lot that goes into it. For me, it's a lot about time. It's a lot about participation at that price. And again, time, I think, is just as important. Maybe we don't have huge volume, but if we spent a lot of time there, there's a lot of players keeping an eye on that price. So, again, when we talk about these levels, there's a lot that goes into it. But if you can trust your levels, and if you trust us when we talk about looking for opportunity, you have two choices when this market approaches that 43.40, right? We have two options: buy or sell, or a third option would be do nothing. Okay. The first thing I'm going to look to do is, how is that momentum? I'm not going to get in the second it touches that price, right? I need to see how this market reacts as we approach this value. So, market came up, kind of pushed right through it, but the sellers came in so fast and so hard, it gave us that opportunity to say, look, if I short 40, I can be in this on relatively tight risk. And look, I know some people may say, look, I don't like risking 20 cents, but I think if you're short in 40 and you put a stop at 60, that's a reasonable trade in this current environment, right? If we're going to take 20 cents of risk, that's $200 a contract. Grand scheme of things, not a terrible loss if this goes against us. Puts us at a point of invalidation of saying, hey, that short side's not there. Buyers are still holding this thing up. I'm going to get out of my position here, and I'm going to look for that next opportunity. But that was not the case here. And again, when I say 60, the reason that's a point of invalidation is this market is now making a new high, right? So when the market continues to make new highs, then that's telling us this market's going higher. We run that short down, and there's a couple different options. Obviously, we never got all the way down to settlement price, right? Settlement price is that first value I'm going to look at. But again, we're talking time and we're talking volume. When we start to look at the bigger picture here on how this market has been trading, and we're going to go up to that point, right? So, whoops, here we go. Let's open this up. We fall right inside this larger time frame value area. We have that point of control, which is 3 cents above settlement price, but we have a lot to get through to get down there. So that's when we're starting to just kind of get an idea of where are some points of high volume nodes, right? So there's a couple different options. We got to pay attention to momentum. We got to pay attention to how this market's reacting, and you got to be quick out here. I get it. This is a tough trade. 100% is a difficult trade to execute on. But if we stick to that fundamental of we're entering on high important levels that we've talked about, we have our point of invalidation up above to take a short. And yeah, we're going to start to fall into some bigger range. Let's kind of find that center. Let's look for those high volume nodes. Let's look for the way this market reacts. Oh, and hey, let's take a look at how our overnight session traded. And if we take a look at that, we have great opportunity, the overnight session down at this 42.80 price point. So there's some good opportunity here, and I hope you guys, if you didn't take advantage of it, these are things that we're looking at. When I talk about levels, I think levels are so vital to our trading because they give us points to execute or look for execution. It's really hard if we don't know where we want to look to execute when the market starts to approach and we're kind of running around like a chicken, not sure what to do, right? So if we go into this and say, look, I'm looking for opportunity up at 40. That's the first thing we're doing. Now, as we approach this, what am I looking at? Am I looking at momentum? Am I looking at order flow? Am I looking at certain indicators to give me an idea of where this market could go from here? So we all have opportunities, and we all have to utilize the way we view these markets to bring that into play. All right, sorry. A little long here on crude oil, but I thought it was a good opportunity. Next, let's go ahead and look at the S&P 500. All right, so S&P 500. Remember, settlement price was down here at 34.27.5. So market, as soon as this thing opened up, it just kind of held around it, right? We never really pushed below. We have a nice little opportunity or shelf after yesterday's market close. That market continued to hold this price. Really tough trade all around, but settlement price was holding. That's telling us it's creating a ledge. It's creating a high volume node. It's creating some sort of support. Again, support and resistance is only defined in hindsight, right? We can't sit here and say it in the moment, but we start to notice it's created support in the past. It's creating support now. we're going to possibly enter into that thing long. And where do we run this? Well, there's a couple different places to run it. But the one I'm going to talk about is a price I've talked about for the last couple weeks. And oh, hey, it's a price that came out in our email. 43.30 is our weekly kickoff high. And then above that last week, JD said it multiple times. I said it a couple times at 34.40. So maybe not a huge range, but we were able to keep our stops tight. If we're getting in down by settlement price, we're not risking too much to be able to take this run to the high side. Next, let's look at NASDAQ. I see a couple of you guys are asking about the NASDAQ. NASDAQ, what can we say? Taking off to new highs once again. This market is opportunistic. The market is trading to the bulls, right? Every single time we see these small little breaks, and maybe they're overnight, maybe they're in regular trading hours. Every time we see a break, here, let's just do a little example to get an idea of what we're looking at. We'll just run some simple measured moves over the last couple days. So we have a measured move here. Market moves to the downside, rallies right off of it. A little bit bigger here. Market moves to that downside, rallies right off of it. And again, let's just take another look here at last night's. Market breaks to that measured move. Again, very rough estimate here. I will normally spend a heck of a lot more time when I'm looking at measured moves, when I'm trying to find where this market may reverse. There's a lot of things to keep an eye on, absolutely. But I think when we look at it, we can get these quick little visuals, and they help us out. And so it's a good tool to utilize here. So this market broke in the overnight session. Soon as we opened up, we got exciting news about everything going on in the Dow Jones. And wild, right? Exxon out of the Dow Jones for the first time in 100 years since the Dow Jones was something. ExxonMobil is out. Salesforce is in. You've got these brick and mortar mom and pop been around forever company is now out of the Dow Jones. And a tech company is now in that Dow Jones like Salesforce and multiple others right now. So I digress. Opportunity here. This market started to create that upward trend, that upward momentum. Where do we get in on this trade? That's tough, right? Well, we got our first opportunity a little bit after the open. Remember, if we're making a trend to the upside, which NASDAQ is trending higher, it continues to trend higher, continues to make new highs. Whether we're looking on this on a daily, we're looking at this on a hourly, a 4-hour, and a 30-minute, we are continuing to trend to the upside. So our job as day traders is to take parts of those trends. We find these little weaknesses. So our first little bit of weakness came in at about 9 o'clock this morning. We saw that weakness. We came down and we checked pretty darn close. Actually, sorry, settlement price was up here at 36. We checked settlement price. We broke down a little bit, but saying, hey, again, that higher time frame, that trend is our friend. We're looking to get in on that. We take this, we look for those weakness, and we move to the upside. So we had a couple opportunities here throughout the day to continue to get in on that trend. And again, our job is not to take the entire move, small pieces of this, manage that risk, and get in on it. All right, next, let's look at the gold. All right, gold relatively range bound. Gonna settle a little bit lower. Settlement price last night was $1939.10. All right, so settlement price all the way up here. Market never made its move to the upside. We do have weekly kickoff low. Let me just verify one more time. All right, weekly kickoff low is just up here above our point of control here today. So we are really flirting with that 1924 weekly kickoff low. This market is testing it. We tested it a little bit last week towards the tail end of last week, and we found a little bit of support here today, and worked its way back towards settlement price, but kind of stayed within some range. Next, let's look at the currencies, and we'll get on out of here. Oh, I forgot to add my volume profiles here. A little big there. All right, so market really stayed inside the range. If we use yesterday's value area high, Point of control from yesterday, a little bit lower, but this is when we start utilizing some of those overnight levels. This market opened up right down here at 1817, approximately 118.17, and we got to kind of start to define our range, and we fade those extremes when we're within that range, right? So first step, whenever this market decides not to maintain any sort of trend, which over the last few days, yes, we have seen some down moves, but we are consolidating. We're staying within each other. And so here's something to start to pay attention to in that overnight. And again, this is going to be a fairly crudely drawn channel, but we're showing some sort of consolidation here that we really want to start to kind of pay attention to. As we start to approach these extremes, we may see this market want to explode one direction or the other. So we'll keep an eye on the dollar. Pay attention to possibly stuff that comes out of the RNC tonight. There's going to be a lot that could affect this, that could affect that dollar. Lastly, let's go ahead and look at the yen. All right, so big move in the overnight session, and this market just really stayed tight. After Hoag spoke this morning, really no directional move, relatively tight. We stayed within just a few bucks of each other and didn't make any directional move. But again, this is kind of starting to define that channel. Value area high and low in this overnight session. Keep an eye on that. It has been making some relatively nice moves in the overnight session, so be prepared in case it does. Once it does accept outside this value area, break outside that range, let's look for that opportunity. All right. So those are our markets here today. And I do apologize. No JD here with me today. He'll be back tomorrow. All right. Let's see. Oh, man, a lot of comments. Let's see. NASDAQ's next level. So one that I looked at, and I don't know if I should have mentioned it on our first ever episode of Three Amigos. I thought I was stretching the other day by saying 11,650. Obviously, we are, ranging close to it. Value area today, or point of control today, was right there. So I'll continue to watch that price. All right, see. Yes, Tanya, I love bull trends. It's done well for me over the last decade. I'm going to continue to enjoy them until they don't help me anymore. So, Rogerio, good to see you. Hoag is the Dan indicator. Dan takes off, and yes, exactly. If I'm off work, buy equities. It's been that way for the last year and a half, right, Hoag? Yes. Red is value area. The whole red and blue is the volume profile. Sarah, I'm glad you enjoy watching it. All right. Prima Pixel and Jose, good to see you. All right, guys. So, fun and exciting day. Salesforce looks like they just released earnings and a big pop there. $30 pop so far. They closed at 208 and they're up at 238 right now, so 10% move there on those. Okay, so I'm getting a little long-winded here. Otherwise, no huge news. JD's got some exciting stuff to talk about tomorrow, so I won't dive in on that too much. Hoag will be back here tomorrow morning, 8 a.m. Central Time for the market forecast. And then, as we've been looking at, let's take a look at Tesla. Tesla is now a $2,000 stock. Crazy, right? It is crazy. I think they popped yesterday to 21.25, something like that. VIX steadily moving lower. We're sitting pretty flat at 22 right now. So, again, something worth keeping our eye on. And that's kind of the major news here. Rogerio, Euro USD. Yes, we did talk about the Euro. So when this is done, you can obviously just go back and take a look. Range bound relatively. I was just kind of pointing out we're showing a little bit of consolidation there. And you're welcome, Ute Gunther. All right. So before I walk out of here, this date in history, August 25th. There's first one's pretty fun. 1939, Wizard of Oz opens up in U.S. theaters. Hopefully, we're gonna get back to seeing movies in the movie theater sooner rather than later. Let's see here. This one's pretty cool. 1875, the first ever known person to swim across the English Channel. 1875. And then this one I thought was kind of funny. I had never heard this story before, but in 1835, August 25th, the New York Sun releases an article talking about life found on the moon, and they call it the Great Moon Hoax. So, little under 200 years ago, people were falling for life on the moon. All right, guys, that's what I got here today. Again, John will be back tomorrow morning, 8 a.m. Central Time for the market forecast. I'll be back here tomorrow afternoon. Until then, stay safe, wash your hands, trade well, and we'll see you guys in the market. Stay safe and take care.